Hello and welcome to Tax Matters. I'm Chamaka Ohauchi. Today, we are going to follow up on our story of last episode on Lagos 2022, the Southwest Zonal Conference hosted by the Southwest Zonal Districts of the CITN. It was the 11th in the series of zonal tax conferences. Note that this is different from the annual tax conference that we are all used to. Lagos 2022 had as its theme, Presumptive Tax Regime and ICT in Optimizing Revenue Generation. Presumptive tax regime came into public consciousness in Nigeria in the year 2015 following the release of the Presumptive Tax Regulations 2015. Under the regulations, micro, small and medium enterprises were categorized for the purpose of levying taxes on these largely informal sector operators. We'll be sharing with you on this episode the theme paper, but before then, this piece of tax education. Are you an intending businessman or woman? Or are you already in business? Is your business micro? Is it small or is it medium? What do you know as your tax obligations as a business owner? In this new series, we'll be sharing with you snippets of the tax obligations of the business owner. It is tagged The Businessman's Guide to Taxation. So what is the starting point? First and foremost, your business must be registered with the Corporate Affairs Commission. At the point of registration, you'll be assigned TIN. Thanks to the synergy that exists between the CAC and the FIRS. Next step is to approach the tax office of your choice. In the case of an enterprise, the State Internal Revenue Services, while in the case of a limited liability company, the Federal Internal Revenue Service. In all the states, there is a tax station close to you. In fact, in many of them, they have tax stations within markets, shopping complexes, and major plazas. The same goes for the Federal Internal Revenue Service. There is always a micro small tax office, MSTO they call them, close to you. To locate the tax office closest to you, log on to www.firs.gov.ng or simply call the FIRS Contact Center. Having registered as a taxpayer, your tax obligations begin. For small enterprise, your taxes are due under direct assessment, which is paid in one lump sum on preceding year basis, latest by the 31st of March of the following year. In other words, if you commence business on January 1st, 2022, your direct assessment under personal income tax becomes payable latest by March 31st, 2023, based on an account of your activities in the previous year. Purchases, sales, expenses, emoluments to self and staff, etc., etc. However, the enterprise owner, the small business owner, the one-man business owner who is involved in sale of goods or provision of services is obliged from day one to file and remit VAT to the FIRS. We must emphasize that VAT is not an additional tax or burden of any sort on your business. Rather, VAT is paid at the current rate of 7.5% by the consumer of your good or service. So you see, whether you are micro or small or medium or big, you have obligations to the FIRS.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Let us add that if you have employees, pay as you earn, one of the two legs of personal income tax is also due to be charged or deducted if you like and remitted to the State Internal Revenue Service where the staff is resident. This obligation, which is the obligation of the employer, must be fulfilled by the 10th day of the month following the month of payment of salary. It is important that you keep record of all transactions, all economic activities from day one. Rent, payment of utilities, bills, purchases, sales, etc., etc. You must demand for receipts for all payments made by you, and where receipts are not available, a cash book will suffice. Next episode, the Businessman's Guide to Taxation continues. Moving on to our next story. A few minutes ago, in the Tax Education Corner, we spoke about record keeping. When records are not available, it becomes difficult for the business owner to file tax returns. When that happens, the taxman resorts to presumptive tax. Last episode, we featured the story of the 11th Southwest Zonal Tax Conference of the CITN, in which we shared with you highlights of the first paper and the opening ceremony. The theme of the conference was Presumptive Tax Regime and ICT in Optimizing Revenue Generation. The second paper, which was the theme paper, was presented by Mr. Fidelis Chukwu on behalf of Mr. Albert Folorenshaw. That is our focus in this segment. Chairman of session was Mr. Olubenga Olaleye, Chairman Ogun State Internal Revenue Service.
This is basically the lead paper, what we have all been talking about. And that is the aspect of the presumptive taxation. And it's not just sufficient to talk about presumptive taxation. We need to look at how can you use ICT to really optimize that tax that we are talking about.
Currently in Nigeria, we use the self-assessment tax system, whereby taxpayers are expected to compute their tax on their own. After they have declared their income, they are expected to determine what is their tax liability. They compute and they make payments of the tax they are supposed to pay. So the system actually passes that burden of compliance to the taxpayers. Presumptive tax basically is use of passive income to ascertain the tax payable by unwilling taxpayers or taxpayers that are not fully compliant.
Despite the self-assessment regime operated in Nigeria, the tax authorities still have some powers.
Because it's not enough to say that, oh, I have filed my tax returns and that has become final. A tax authority can still look at it and say, no, we don't agree with what you have filed. And because of that, we want to use alternative approach to say this is what you should pay. In the Companies Income Tax Act, Section 30 and Section 65 specifically talk about giving the tax authorities the power to use their discretion to determine what profit of a company should be or what the tax should be. And if you also take it down to Personal Income Tax Act, you see that in Section 54, there is the section of provisions that talk about best of judgment, which means when the tax authority look at your tax returns, they can say, no, we don't agree with what you have. And they may decide to look for alternative means to say, this is what we want to do. If you also go further to the Petroleum Profit Tax Act and Petroleum Industry Act, which was passed last year, you see that in Section 35 of the Petroleum Profit Tax Act, they also talk about use of best of judgment. And if you go to section 283 of the Petroleum Industry Act, you will also see that same provision there, which means it's not new. It's something that has always been there, and it's something that is supported by the relevant provisions of the Tax Act.
As you can see, Mr. Chukwu took a holistic approach to the issue, stretching presumptive tax regime beyond the informal sector, beyond personal income tax, into the realm of taxing the formal sector.
Another instance is also for non-resident companies or individuals that probably do business in Nigeria. At times it's very, very hard to be able to say this is the profit that is coming from this particular business they have done in Nigeria. And when it's very difficult to ascertain what that profit should be, then the tax authority will be at liberty to apply presumptive tax on such a company.
How do revenue authorities arrive at presumptive tax?
Most times, tax authorities deploy different methods. One is they may look at your bank transactions, they may look at your records and all that to say that on this basis, we have determined what your tax should be.
How do you bring those outside the net into the net?
ICT or IT-enabled system can actually provide information. It can give you data. It can tell you these are the number of people. What of transactions that are done electronically? How do we make use of those information? It's also very, very important. You have different agencies or government registering different people at different times, but has government at any point look at how do we synchronize information that we have obtained from any of these agencies?
In discussing the paper, Ms. Folashade Kuka of the LRS expanded the narrative.
Presumptive tax is an aberration where there is no voluntary compliance. It's best of judgment. What is best of judgment? What is presumptive tax? This is when you do not declare your income, because the onus is on the person that is earning an income to declare honestly what they are earning from all sides and all angles of their transactions. So where you don't do that, then you have virtually just thrown in the towel and giving the tax administrator the reason and the impetus to now look from their own angle at something that will drive you to declare your income honestly. So it's important that you know that it is shying away as a taxpayer from your duty to declare honestly that now brings in the tax authority to do that for you. So it is a duty that we would willingly not even want to do, but we must do because there must be no vacuum. And once you are earning an income, then we must then sit down and try to profile on your behalf and say, okay, on a balance of a lot of probabilities, what can the likely income of this person be? Looking at the sector, looking at the type of business, looking at a lot of variables, and then we try to come up with a best of judgment. So, integrating of ICT, I will be looking at this thing from two perspectives. I'll be looking at it from the formal sector and I'll be looking at it from the informal sector, because it's not a one-size-fits-all. You have to look at things and then put them in their various silos and then fashion out a solution that is bespoke to what you have put in the various silos. So first you will say formal. The formal has a structure. They have an income and expenditure report, they have audited financials, and they have employment letters, they have resignation letters. So all the information and documents that they need to declare honestly are already within that structure. So it then means that for people not to declare honestly and to be subjected to a presumptive tax, it means that they have willingly decided not to declare. Mostly in the formal, that is what happens. You have willingly decided not to declare. That is why you now are subject to a BOJ. In the informal, otherwise, it is not for lack of declaration that we subject the informal sector to presumptive tax. And I'll say that in all climes, a lot of climes you don't have presumptive tax operating in the informal sector. But in Nigeria, it is government's way of saying that, yes, we know that you don't have your books in place, but we want you to be stakeholders and beneficiaries and to be able to beat your hand to your chest and say, oh, I have paid my tax. And therefore you become a stakeholder in government and in governance. So government comes up and says, okay, let's look at the baseline for these people and let's give them a little token to have them come on board, and so that they can also be stakeholders in governance. So government sits down and looks at it that, okay, for market women, what can be reasonable? Because reasonability is subjective, and you might likely not get it right. Some people might say what you have given is reasonable. Other people on the other side will say it's unreasonable. So you just try to have to look at it on a balance of probabilities and maintain a near to zero level of it weighing more on one side. So for the informal, it is not lack of declaration most times. It is the fact that they do not even have all the requisite things to declare. And then the government does not want to put a burden on them to have them having to get a consultant, having to get a tax expert to review their books. So government says, okay, come in through this. And then when they come in through that little conduit hole into government and their taxpayers, then government begins the next level, which is to what? To separate the wheat from the chaff. And thereby looking at them, profiling them, putting those that should actually be on presumptive tax or the lowest baseline tax in a silo, and then putting or graduating all those that are hiding in that shades of gray to avoid tax. And then they lift the veil and take away the shades of gray and begin to profile them. And then you have people in Alaba, or you have people in Gotha that go to Switzerland and are working or operating in the informal sector. And we now transit them to where they should be, either on direct assessment, payee, or informal. And thereby, you lift that shades of gray. But what is the little bit of ICT that I see that we can quickly deploy into the informal sector that will continue to take a lot of people out of the informal sector into where they should be? One, ease of payment is very key. And then ease of knowledge, engagement, enlightenment, and simplification of all the deliverables or taxes or things that they need to understand. One, to nil out touts. Two, to nil out middlemen. Because this is why a lot of people get fake receipts, because they translate their tax things and give it to maybe a middleman, and the middleman goes to patronize a tout. So once we can nil out these middlemen and all these touts by information, ease of information, so that the woman in the market can understand what they need to do.
There was a robust exchange between the paper presenter, the discussant, and the audience.
I was Director of Informal Sector in Kwara State Internal Revenue Service. Some people, or most of us, most times when we talk about the informal sector, we limit it to the artisanals. Where do you leave a lawyer that practices from his home? Where do you leave an accountant, the tax practitioners that does these businesses from their home? So what we did then, we classify them under this acronym we call PAM: professionals, artisanals, and marketers.
Lifestyle taxation, BOJ. And I quickly remember a lot of retired personnel whose income already have been taxed. And they still have to live their lives anyhow. There are people who earn multiple, or maybe over $1 million monthly, even as pension, and they have a right to live their lives. I'm not sure right now we tax pension, income from pension. So we need to be careful if we do that. We also need to be careful when we assume that people earn a particular sum of money because of a certain lifestyle that they live. But then talking about the commission agents, but the money comes into the account. For instance, the airline of maybe insurance brokers, for instance, you can see a whole lot of money coming to the account, but it doesn't belong to them because their earning is actually commission-based. But there's an FIRS standard that says you must declare all income. So, and you see me making $1 billion turnover, but my income there is 5%.
There's no one size fits all. You need to separate things and put them in their peculiar silos. Yes, you also spoke about the fact that, oh, the person is retired. Yes, somebody might be retired. My grandfather died at 91. He was retired for 35 years before he died. But he had rental income and other incomes. And he declared his tax till the year he died. So the fact that somebody is a retired person and has a lifestyle, let us know who is funding that lifestyle. That is all we need. You have a lifestyle, it's not funded by you, declare who is funding it. You bought a car, it is a gift, declare who gave you that money for that gift. All we need is that vacuum. We do not and we would not allow for vacuum. There must be no vacuum. So continue to fill in information. And once we have that information, then it will help us to close the case. And we will now pass the buck to the next person. As I tell people in the market space, I say, if you tell me that you have not made an income throughout the year, it's not a big deal. You can declare nil income. But I will categorize you as a baby. Somebody is feeding you. Just tell me who is feeding you, who is housing you, and then I will now ask that person for income or for tax. So you can declare nil income. The law provides for that. But you are dependent on someone. Just let me know whose dependent you are. And let me ask them whether they can feed themselves and feed you.
The question on where do you classify professionals? Of course, when you look at professionals, accountants, lawyers, you may want to look at their obligations from two angles. One is that if they have employees, they have obligations that those employees to account for their payee and all that. But for the business owners, the lawyers, the accountants that own the business, they still fall under the direct assessment. They need to file their tax returns under the direct assessment, and that is based on their profits. And most sole traders, individuals, still fall within this category. As a business owner, you first need to declare your income, and probably that is where the commission agent comes in. If you are an agent, you are a business owner, first is that you earn revenue. That revenue can go into billions, and that does not mean that the entire billion is liable to tax. You also need to first take your cost. So whatever that is left as your profit is what is now liable to tax. But that still boils down on keeping proper records. If you don't have proper records to say, this is my revenue, this is my cost, it gives room to the tax authority to then say, since you don't have records of your cost, then I'm taking this entire income as your revenue. So it's all about record keeping.
Summary. Presumptive tax is, after all, not new to the tax system in Nigeria. As you have heard, it is backed by law. Companies income tax, personal income tax, petroleum profits tax, name it. And of course, it can be called presumptive tax, deemed income, burst of judgment. Where there are no accurate records and where there are no definite statement of accounts, revenue authorities are allowed to come up with a presumptive assessment. We are coasting home, and we want to leave you with more sound bites from the FIRS 2021 Annual Reward Recognition and Award Ceremony.
The next category is tax offices that met 100% and above of collection target in 2021. In arriving at selecting nominees for this award, consideration is given to field officers found to have performed exceptionally in the year 2021 by surpassing their targets by 100% and above. Also in that category, The next category will be tax audit offices that collected 100% and above in collection with at least 70% and above cash component.
The next category is the citation for the Employee of the Year Field Officers. The Employee of the Year Field Officers Award is presented to the officers that have performed exceptionally well in the year 2021.
Once again, congratulations to the winners, and to others, best of luck next time. Thank you for watching. See you next week.